Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Before we get started with today's business, make sure to smash that like button, ring that bell, and subscribe to Crypto Republic. Bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Just a reminder, this video is for educational purposes only. This is not financial advice. Always do your own research before making any investment decisions. As always, I just want to thank everyone who takes the time to like, subscribe, and comment. Liking and subscribing really do help us out very much, and I love answering everyone's comments when we get a chance to. With that being said, XRP, gold, silver, and copper just got a massive signal from a world power. Few see what's coming, Part 3. Well, ladies and gentlemen, the crypto market has experienced one of the worst weeks in years. XRP is down at $1.45. Ethereum is under 2,050. Bitcoin sits at 70,240. But what's really happening? Is it just a market correction or something far bigger? Think about this like the tulip mania of 1637, when fortunes were made and lost in weeks. Back then, tulips were the crypto of the Netherlands, volatile, exciting, and sometimes devastating. Today, digital assets play the same role in our global economy. Ladies and gentlemen, we are seeing moves of unprecedented magnitudes. And you really got to stop and ask yourself this. Do you have the Gucci clarity yet? Do you know why you started this journey? Are you sure you want to be on this journey? These are questions you got to ask yourself. Well, ladies and gentlemen, why the markets are crashing. One major factor is the nomination of Kevin Walsh to the Fed chair, replacing Jerome Powell. We've been talking about this. Walsh supports higher real interest rates and smaller Fed balance sheets. Historically, tightening monetary policy has triggered crashes. In 1929, small interest rate hikes helped accelerate the stock market collapse. In Japan, during the 1990s, attempts to control asset bubbles led to a lost decade. Investors had expected rate cuts, but instead, risk assets are being deleveraged. Some numbers put into perspective. $2.2 billion was liquidated on February 1st, the largest single-day wipeout since October 2025. Around 165,000 traders were affected, including over 500 million in Bitcoin positions alone. Deutsche Bank highlights three factors contributing to this turmoil: hawkish Fed signals, institutional outflows, and thinning liquidity. Stalled regulatory momentum. Let's talk about a regulatory update. DC tensions. Are we going to get a crypto bill done, or will those chaoses continue? Senator Cynthia Lummis, chairman of the subcommittee on digital assets, recently explained, "We lost a big window after concerns from exchanges, but we're holding time on the Senate schedule this spring. Banks worry that deposits could flee to crypto exchanges offering higher yields. Historically, during the 19th century, free banking era in the U.S., people moved deposits to banks offering better returns, which destabilized weaker institutions. The principle hasn't changed. It's an innovation problem," Lummis continues. "Banks haven't evolved in decades. Now customers want more, and the old system is feeling the heat." Some market watchers highlight strategic moves behind the scenes. Recently, a $300 million offshore transfer conceded with XRP dips. This is reminiscent of the Renaissance Medici bankers controlling liquidity quietly to shape markets. Today's institutions do the same, albeit with digital tools. These are transfers that are deliberate. Institutions are signaling the market to move fast or get left behind. Ladies and gentlemen, history shows this pattern, and time again, well-placed narratives have influenced markets for centuries, from 18th century London stock jobbers using rumors to modern crypto. I want to talk about stablecoin versus historical banks. Stablecoins today are one-to-one backed, whereas banks rely on fractional reserve. Think of it like the gold standard versus fiat experiments of the 20th century. Gold-backed money provided predictability, while fractional reserves introduced leverage, risk. Senator Tim Scott put it clearly. Crypto firms can pay rewards responsibly, but cannot advertise as banks. Consumer protection is key. This balance of innovation and regulation is the same principle that guided early central banking, ensuring stability while encouraging growth. I want to talk about strategic leaks and market messaging. This is really important, because this seems to have a big impact on what's happening now. Exchanges are pushing for staking rights, allowing small investors to earn high yields. Timing is critical. I want you to look at it as a managed signal. When banks and regulators can't counter tech, they use transparency leaks to reshape narratives instantly, just like pamphlets influenced London markets in the 1700s. Market messages are not accidental. They're deliberate, strategic, and deeply rooted in history. Power has always relied on information advantage, always. Well, ladies and gentlemen, this is what we're doing when we're looking at XRP. And this is not financial advice. This is just our opinion of what we look at and how we approach it. We're holding XRP despite the drop. To us, it doesn't matter because we're in it for the utility. We're in it for the long term. For us, every approach down to 115 and 112, we're dollar cost averaging as much as we can. We're staying disciplined and not trying to time the market. We're doing the same thing with HBAR as well every time it falls below $8. And ICP as well. Historical parallels exist everywhere here. I want you to think of Benjamin Graham. In the 1930s, he taught patience and discipline during volatile markets. Early Bitcoin adopters in 2011 understood the same principle. Hold, average in, and ignore short-term chaos. Again, none of this is financial advice. This is just our opinion and perspective that we're doing for ourselves and people that retain us in any capacity. Again, not financial advice. I want you to ask yourself, could this be a final shakeout before a major rally? Like Black Monday in 1987, followed by a bull market? Or a prolonged reset, like Japan's lost decade? Japan's lost decade is something that was drilled into my brain because when I started, that was one of the biggest topics with the carry trades. The zombie nation. Again, I have spoken about it. If it didn't work for them, how is it going to work for us? How would it work for anybody else? You know, I want to talk about regulatory outlook and historical comparisons. The crypto market structure bill is near the finish line, but negotiations over stablecoin yields and protections continue. The White House has set a February deadline. Patrick Witt, executive director of the Presidential Digital Asset Advisory Committee, stated, "We won't accept legislation targeting families. The focus must remain on a fair, transparent market. Clear rules stabilize markets. Think of the Glass-Steagall Act after the Great Depression, restoring trust, confidence, and discipline to banking. Crypto regulation seeks the same stability for digital assets." Here's a key takeaway. XRP and crypto are volatile. Short-term losses do not dictate long-term trends. These are mostly from over-leveraged traders. And unfortunately, they learn a lesson and they get cut up like sushi. Institutional regulatory signals are critical to understanding market direction. Stablecoin versus banks. I need you to understand reserve and yields. It's echoing lessons from the gold standard. Personal strategies matter more. In situations like this, you have to ask yourself and find your personal strategy that matters the most. Holding, dollar cost averaging, and diversifying. Always ask, what's the institutional angle? What's the regulatory angle? Just like the London coffeehouse traders in the 1700s studied market whispers before placing bets. This is very, very important. Always ask, what's in this for me? What's in this position for me? Why do I want this to work out? Besides seeing green, what's in it for me? That's the most important lesson I learned on the floor of the New York Mercantile Exchange from locals who made their own decisions with their own money always. What's in it for me? The risk-reward ratio here. Ladies and gentlemen, where will the bottom be? I want to see in the comments below, and if you made it this far, please give me a like and I appreciate you. Will there be a quick recovery or a prolonged reset? XRP adoption and the broader crypto market tied directly to institutional strategy and regulatory clarity. Markets react quickly, but informed positioning pays off. What we always do, and this is not financial advice, we're long-term, we're accumulation, we're holding. Again, anybody that retains any capacity. We're DCAing always, and we're preparing for the next wave, not financial advice. Again, our opinion on anyone who retains any capacity. Ladies and gentlemen, history always favors those who study it, stay disciplined, and think long-term. Always. I want to hear about your approach, what you're doing, the ups and the downs. Does this remind you of what happened before in history, or how is it affecting you, and what's your strategy? If you made it this far, it's time for the Italian ice candy. So I couldn't be with you for the last day or so. Again, with everything that's happening, I don't have enough time to get off the phones. Again, we always go over certain things. Traders need to make their weekly money, their monthly money, their quarterly money. Regardless, every prop desk has to do this. Hedge funds as well. So the easy money. When people take profit, nobody wants to go into the weekend with open positions. You take your winnings and you eat it. This is where you get that Gucci clarity. You get that Gucci conviction. You get that notch in your belt for wins. When there's rough time, you take this lowest hanging fruit and clock the trade. I want to talk about something. We brought up Tether. In the news, Tether makes a $150 million move into gold. They're going to bridge digital finance and bullion. So Tether is doubling down on gold. The company announced a $150 million investment to gold.com. It's strengthening its physical bullion holdings to connect traditional gold markets with digital finance. This move fueled by institutional demand for gold-backed assets. One might ask, we said in a previous video, who are they buying gold for and why? Are they being proxy? Tether will acquire $125 million in gold.com shares now with an additional $25 million planned after regulatory approval. So Tether's going to have a seat on their board, and they're formalizing a strategic partnership between the two firms. So again, remember, Iran purchased $500 million last time we looked of Tether and other stablecoins. Funny, right? Tether manages over $185 billion of USDT, backed mainly by cash, U.S. Treasuries, Bitcoin, and gold. So earlier this year, the company disclosed it holds about 140 metric tons of gold, valued at more than $23 billion, and issues Tether Gold, a leading gold-backed token. The investment is designed to expand distribution and credibility for Tether's gold-linked product while supporting Gold.com's retail, institutional, and digital services. So this is a major move, again, is for them to get involved. You know, they were founded in 1965, Gold.com, and it operates 7 major platforms such as jmbullion.com, Stacks, Browser Galleries, Government.com, Monex, Precious Metals. This move comes on the heels of Tether reporting a $10 billion in net profit for 2025 and $6.3 billion in excess reserves. So you can see where they're going. This, again, their partnership, it marries physical precious metals and digital finance. It's what they're doing. It's, again, there's something to keep your eye on. The deal signals and growing convergence of traditional gold markets and digital finance. Very, very important. Again, you know, I've been telling people all day, some of these companies with stablecoins remind me from different parts in history about how other companies and different business structures, whether they were companies or not, this will be in the fourth part of this series about what we really view these people are and where they're coming from and what they're doing. See, history repeats itself always. It just changes the shape and fashion it's in. Again, what do we see in Shanghai? Shanghai, again, they're the dominant silver player right now because they really need the market. They need the metal. That's it. Their need is real. Everything else is Harry Houdini, hocus pocus. So they have demonstrated their ability to influence global silver pricing. Look what happened in silver. We saw it come down magnificently and then bounce back up into some form of reality. People took the profit. The easy trade right now, the lowest hanging fruit, is done for now until it's recharging. But I want to talk about this part with silver because this is important. And this is what we're conveying to people, again, in any capacity. Again, being a financial mercenary, you got to get what you got to get. And you quite don't care. You're in this for the do-re-mi-do. You're not in this for anything else but for your bank account to grow. Nothing else, nothing more. You quite don't care about anything else, truth be told. I know it sounds cold, but again, that's what it is. So many people got caught up in sushi yesterday. It's ridiculous. The silver price narrative is breaking down, ladies and gentlemen. London just gave it away. Sudden spike in London silver lease rates, empty bullion shelves, and record physical deliveries are telling a very different story than paper price suggests. Future markets signal weaknesses. The real-world silver market's flashing, warning signs of tightening supply. The clearest signal quietly came from one unmistakable thing. The one-month silver lease rate in London jumped to 6.1%, a level not seen in years. You got to let that sink in, 6.1%. That number alone undermines the idea that silver is oversupplied or unloved. The recent price action wasn't the collapse in demand, ladies and gentlemen. It was leverage being forced out of the paper market. If physical supply were abundant, borrowers wouldn't be able to pay such as steep rates just to access the metal. They're paying up because silver is getting harder to source. What looks like a price decline is actually a separation between paper claims and physical reality. Future contracts are being unwound, but the underlying metal is being locked away. The lease market is effectively broadcasting what the price mechanism refuses to acknowledge. Available silver is tightening. Physical demand is overrunning the system. Hence, the physical demand coming out of Shanghai, it's like a yo-yo. You see it. Every time it drops, it comes right back up like a yo-yo. COMEX data reinforces the picture. Physical withdrawals from exchange vaults have accelerated, with more than 60 million ounces leaving month after month for actual delivery, range than paper rollover. In 2025 alone, total COMEX silver deliveries reached roughly 474 million ounces, more than double the prior year's 202.7 million. Every month exceeded its year-early counterpart. That consistency points to a structural shift, not a one-off abnormality. Even traditional quiet periods are no longer quiet. January 2026, usually a minor delivery month, saw nearly 49.4 million ounces delivered, a record for that time frame. You got to pay attention to all this. You should write that down. Market participants aren't waiting for peak contract months anymore. They're not. This was what we always paid attention on the floor. They're acting early, concerned that the metal may not be available later. February has already validated those fears. Within the first days of the month, almost 19 million ounces were delivered, nearly matching the entirety of February last year. Let this strike. These numbers are massive. More striking, all open interest stood for delivery. This has stopped behaving like a hedging metal and market and started behaving like a scramble for supply, ladies and gentlemen. March, the major contract month we always paid attention, now looms over the system, with open interest equivalent to roughly 429 million ounces. Even modest delivery participation would overwhelm available inventories. So at 25% delivery demand, the system would need about 100 million ounces at 50% over 200 million. At higher participation rates, the numbers become unworkable, ladies and gentlemen. The inventory problem no one wants to price in registered COMEX silver. The metal actually was available for delivery has fallen sharply. From over 160 million ounces in October 2025, inventories have slid to near 103 million ounces today, draining at close to 785 ounces per day. That pace continues, registered supply could drop 85 million ounces by the start of March deliveries. That's massive. It's just massive. That means there's a lot of chaos happening right now. Again, and Shanghai's leading the way. Like I said, that's the compass. Meanwhile, eligible silver remains largely untouched as owners refuse to make it available at current prices. So what this means, when metal holders won't sell into exchange designed to trade it, price discovery is already compromised, ladies and gentlemen. If March deliveries resemble last year's roughly 80 million ounces, inventories will be pushed to the brink. If deliveries exceed that level, the exchange faces uncomfortable options, cash settlements, forced liquidations, or visible strain on the system itself. None of these outcomes preserve confidence. This is why paper prices are losing authority, ladies and gentlemen. And if you're going to have to rewind that, I'm trying to take the PhD out of PhD for you. This is why the quoted silver price is becoming less meaningful. People aren't paying attention to it anymore. Future markets can only function as price mechanisms if they reliably deliver the underlying assets. So important. We're going to tie this into XRP very soon. Again, what I'm laying out is going to be tied into XRP. When delivery becomes questionable, the price becomes performative. Silver's true value lies in what it does, not what it trades at. So important. It is one of the most electrical and thermal conductive elements known. It's critical to electronics, solar panels, medical applications. Again, in China, you take this, you hobble 85% that they go over to Europe with. You hobble that. Medical applications, advanced batteries, modern communications. There's no practical substitute. Roughly half of annual silver demand now comes from industrial uses, particularly electronics and photovoltaics. And that share continues to rise. And at the same time, the mine supply is struggling to grow after years of underinvestment and declining ore grades. The gap between what the world needs and what it can produce is widening. Repricing is not optional. So when derivative markets can no longer meet physical demand, price discovery migrates elsewhere. Industrial users don't care about future curves. They care about securing supply. As available tightens, silver stops becoming speculative trade and becomes a strategic input. That's why it's on the special list now. That's when hoarding replaces trading. Corporations, governments, and individuals begin hoarding silver, not as bets. I told you before, we're getting phone calls from people at our offices in Indonesia and South America trying to get whatever we can get our hands on. And at the end of the day, we have offtake agreements that we've had signed in place for the last 2 decades. So I'm blown away who's doing this and why. Moving right along. At this point, paper pricing losses are no longer relevance, and physical pricing takes over. So you got to ignore your screens if you want. They show you what traders hope silver could cost. But to speak to refiners, mints, and industrial buyers, it's a different reality. 2-tier market where physical silver commands increasing urgency. Again, what I just went over and laughed at. Markets eventually gravitate towards the truth. In silver's case, the truth is forming in vaults, factories, supply chains, not on settlement dates. The paper structure is under strain and the adjustment is already in motion. By the time it becomes obvious, the repricing won't be a prediction, it'll be history. Ladies and gentlemen, I just went through that big tirade on silver because it's important. I've never seen people call for silver that are calling now, ever. We're predominantly in platinum and palladium, always in Indonesia and silver in South and Central America. But the people, again, that we've been dealing with for 20 years come from offtake agreements always. They bought whatever we could feed them. When the system totally breaks, the regime of what physical needs and what paper, Harry Houdini hocus pocus, when that breaks, we believe more utility is going to come in for XRP. And this can only go on so long because, again, the physical demands are reality. Paper trading is like Harry Houdini. I have an elephant. Let me make it disappear in front of a crowded audience with a diversion, distraction. It can only go on so long before it just falls through the ice. And what I've been telling people, in my opinion, and anyone that retains this in any capacity, as XRP is being used right now more and more, we're going to get to this, the third largest bank in Saudi Arabia has made some deals with them again. And if you look at all the products they have right now, Ripple Treasury, Ripple Prime, all of them, they're preparing to make alpha outside of just what XRP is. The moves up and down, what's happening to people, you really have to have that Gucci conviction, Gucci clarity right now. But what we just went through, and if that didn't make sense to you, please rewind this part of the video and take notes on silver processing, what's happening right now. That's the tug of war between physical demand, paper trading, leasing, a lot of things, again, right? You know, I remember on the floor, the second pit I worked in was the RBOB pit, getting hit in the head. And this one trader, I'm not going to mention his name, was a local, he come down, and in the 20 or 30 minutes before closing, the amount, and I can remember him screaming and yelling, the contract size is 200, 300, 400 lots. I was blown away by the moves that he was doing. Granted, at first I didn't understand the mathematics, but when I understood why, and I later became very friendly with him because of family on the Mercantile Exchange, everyone wanted to be friendly with my family, I learned a lot. What's happening right now is big changes. ETFs are still buying XRP. They're not stopping right now. I'm going to come right back to in a second. So when this, I want to say, yo-yo strings finally snaps and it's game over, we're going to see a lot of different things. I want to talk one real fast right now about the screwworm parasite. Again, everyone remembers my little nuggets about the migrator when I was wheat trading and crop dusters, the amount of alpha we made from that. Just want to give you an update right now on the screwworm parasite. It's already affecting cattle markets, even though U.S. herds haven't seen a major outbreak. Well, ladies and gentlemen, people like us, we don't wait for confirmation. We price risk in ahead of time, okay? That's starting to be priced in right now. So the futures market are pricing in. Traders have already reacted with real moves in cattle futures. It's not just theory anymore. They're preparing for market pricing. So cattle futures have dropped amid screwworm concerns and profit taking as the risk of spreading into the U.S., because right now it's strongly in Mexico, but it's on its way, and you can't stop Mother Nature. So how this is affecting feeder cattle futures have slipped as confirmed cases rise in Mexico, and it's close enough to really affect all the supply chains. It's very, very important. So when supply fears tighten, like import halts and reduce feeder cattle availability, prices, especially for finished cattle future, can actually climb. So this is going to disrupt everything. This is something really to pay attention to, because I love making strategic moves, and this is not financial advice, just my opinion, on pestilence. Pestilence is one of the easiest ways to profit in chaos as a financial mercenary, because we don't care what happens. We take advantage of the effect, not the cause. If you can figure out the cause before the effect, you're there already. So as the supply chain disruption broadens, you have all kinds of problems coming in right now. And to sum this up, to stop the parasite from entering U.S. herds, live cattle imports from Mexico have been suspended in parts from 2025. This removes hundreds of thousands of feeder cattle from the supply chain and put upward pressure on prices, even temporary closures, plus increased inspection protocols, slow down cattle placements in feedlots, shifting where cattle are finished and tightening immediate supply. So when you look at the disease versus the market impact, it hasn't been that verified yet, but widespread screwworm infection In the U.S., cattle herds could be devastating. Some reports of infection have been falsified or unconfirmed. Yet markets don't wait for outbreaks. They price risk ahead. So rumors are scaring alone have caused pricing. What this means for prices, again, imports limited and domestic herds are already low. Upward pressure on cattle and beef prices are already built into the market. And escalation of disease risk or further border restrictions would almost certainly amplify pressure, affecting both futures and consumer beef products and prices. So in short, the screw-on parasite is impacting cattle futures and pricing, not because U.S. herds are infected, but because perceived risk and expected trade disruptions are already reflected in the market. So this is what we're looking at right now. So as XRP is rebounding, right, the utility of the token that we're following is very important. So if you look at GEO, Riyadh Bank's innovation division, they're the third largest bank in Saudi Arabia. They have just made a deal to work with Ripple and expand their presence in Saudi Arabia. This is massive, okay? So again, it's a very bullish move for XRP as it grows. So to me, XRP is still growing. People are using these riptides in price to DCA. They're in it for the long run, like ourselves. When you're in something for the long run, you don't let the price of the daily candle dictate your feelings, because your price and your position sizes are to a point, like what Jesse Livermore said, that it's not going to get cut up like sushi, okay? Excuse me, the phone's ringing, never stops. Not going to get cut up like sushi because it's in the proper time and the proper price for that point. Seeing what's happening, and I can understand people are visibly upset. I get it, right? But this is where you have that Gucci clarity, that Gucci conviction. And I want to welcome everybody on our Patreon who's brand new. Welcome everyone to the membership channel. I love chatting with everyone at night. When we go over what we're going over and why and how you take advantage of the chaos and things I'm talking about, because again, how does this have anything to do with XRP? How, screw worms. How does this have anything to do regardless? I told you, being a financial mercenary, you look for the future. You take advantage of what you can, what's right there. You don't get shaken out. You don't care what anyone else says. You have your conviction, whether we're more or feasting on everything. Let everyone get cut up like sushi. Who cares? All that matters is you protect yourself and where you're going and why. That's the most important thing here. So your conviction is, why are you in this? Where do you want to go? How are you going to get there? People complain that they didn't have large enough size positions. These downturns are gifts. I'm in the camp, again, that believes XRP true value is in its utility, not the trading. And as it grows and it's spreading everywhere in all the major banking situations all over the planet, okay, it's in everything now on the Western shore, it's the Western side of everything, the debt and leverage side, the treasury markets, okay? I told you, if you track why people are trading and what they're trading, you can take that momentum money and you can do well with that. That's it. Seriously, that's all you need to know. But when you look at everything like this, the money came out of the metals market once people realized certain things that we've discussed about in other videos. Banks printing money to buy metals. Walsh clocking the profit. Never let a winning trade become a losing trade. Don't let it run after you. If you're position trading for the long run, take advantage of what makes sense to your own situation. This is not financial advice. It's just our opinion. Again, none of this is financial advice. Where the world is going and what we just saw, get even more excited, because we believe when the disconnect becomes real and true in the metals market, it will spill over into other things. And as this spills over into other things, XRP is going to absorb most of this, in our opinion, going forward. Again, it takes time. But as a financial mercenary, you take what you got to take to get what you got to get each day. That's it. Again, when the broad theme that the entire world is going on changes, the market takes a step back and they want to see where things are going to go. So if it makes sense to you in your own personal situation, take advantage and gorge when you can. That's why I tell you, you're the Mora. If you're looking for more of how these tips can actually help you and your perspective, looking at all this, please come do and join us in the Patreon. I do love talking to everybody. But get excited. Keep that Gucci conviction. Have no fear with this. Don't get shaken out. Nothing happens overnight. Never. Again. So in our opinion, as institutional adoption of the Ripple network grows, it's going to be very, very big. So I want you to think about this, right? The very people who shaped the global financial system have gotten their eyes on XRP from the very start. You're hearing in the news every day. They debated it. They tried to control it. They tried to slow it down. And yet here we are. This isn't hype. This isn't theory. It's documented influence at the highest levels. Here's the craziest part. While retail investors panic, all the leverage is gone, metals are quietly stabilizing, and XRP is holding its structure. You're watching history unfold. You're seeing a rare moment where everything aligns quietly. The system, the assets, the players behind the scenes. If you're still here, still paying attention, still thinking instead of reacting, you're already ahead of most people. Years from now, this period won't be remembered for panic. It'll be remembered as preparation. Stay patient, stay grounded, and above all, pay attention to what's quiet. Markets don't do this by accident. That's not noise, that's structure, ladies and gentlemen. You're part of it. You're witnessing it. And you look back one day and you know you understood what most missed. Thank you for being here. If you're still here, I appreciate you. Please like and subscribe. I appreciate every one of you. Have a blessed day, a blessed weekend. Always stay emotionless. Watch XRP closely. This could be a defining moment. This content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Remember, the game is changing, and those who understand it first will benefit most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring that bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends shaping digital assets today, giving you content, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic. Love you all.